But I do think there's this moment in time right now where it's been kind of legitimized to do crypto. And unfortunately, the moment that happens, who are the first people pushing it into the spheres of influence? Probably the worst people you could imagine to be doing that, right? Hello, everyone. We're back for another episode of the Spelunking podcast. We had a brief discussion before I pressed record where we tried to set an agenda and we failed. So,
I mean, this is going to be a totally normal episode, is what that means.
Right. Yeah, we're relying on our general ability to rant about whatever comes up. But we did have one thing that we thought we should maybe touch on a little bit, which is meme coins. We tried to figure out like a clever, slightly differentiated angle to talk about meme coins. We also failed to do that.
Well, we also tried for about 30 seconds. So I think this is like half technology podcast, half stand-up comedy improv.
Yeah. But I mean, so like meme coins obviously have been a hot topic now. We had Trump, we had Melania, we had Libra, which like is sort of an ongoing saga to some extent. I haven't been following it super tightly. I did listen to like the CoffeeZilla interview of one of the guys that was involved. And it's interesting, right? Like it doesn't, I guess to summarize is it doesn't look that great. It doesn't reflect very positively on the leaders of these various countries.
Well, at the very least, it's happening in Latin America where you would sort of expect it. And I get to say that given that I'm Latin American.
It's happening in America.
And well, no, yeah, but it's different.
Generalized America.
No, I mean the Libra thing specifically. It is funny that this is, and I'm gonna at some point we need to do kind of like an episode where we just collect highlights of the stuff where we were right. And I'm gonna take this one as one where we were right, that on the fact that we mentioned that the Trump meme coin was kind of like the market getting like the massive grift out of the way early on, and then you're just getting smaller grifts after. This is definitely a smaller grift. It just happens to be very visible because of how quickly it imploded. This thing was less than 6 hours. And the fact that it happened with the president of an rather, let's say, financially embattled country who also has a lot of political opposition going on currently.
Well, has a lot of political opposition, but also is like it's not. Milei is a worldwide superstar right now, so his influence kind of far outweighs the traditional influence that an Argentinian president would have. I can't name a single Argentinian president, but I do know.
I mean,
I think everyone else does
better.
as well.
He's better. No, I'm not sure for something like this. I'm not sure how much influence he would have had worldwide, considering that the whole thing collapsed in hours, right? I mean, Europeans did not. It's not like if you were an European who follows Milei, you couldn't have jumped on this thing because it happened like at midnight.
No, I'm saying he has reach, right?
He is well known, and he has a lot of eyeballs on him. Yes.
Yeah, you could argue that if like the previous Argentinian president had done a meme coin, I don't know if we would even be talking about it. Maybe.
Yeah. Okay. For the record, in case anybody hasn't looked into it, he didn't do a meme coin. He just stupidly promoted one from a team that apparently got some backdoor through him by bribing his sister. Apparently, so it's not like.
I have to say, I'm impressed by these teams in some sense. In their total, like
Mika with the contrarian take.
No. I mean, I just meant that in their obvious and kind of total lack of anything like any gravitas to them or any. They just don't like. If you read one of these people, see them on Twitter or see them on podcasts, they do not. It's not like you're talking with Oppenheimer or
they're
someone
not influential.
Like this. Yeah, this is not the best that we're sending. Yet they managed to get so deep into the sphere of influence with these presidents and like people around them that I'm actually kind of impressed that someone so unimpressive can get so far in this process, and that I think teaches me something and makes me adjust some priors in my head about something. I'm not sure what.
Well,
Okay, so
this is maybe coming into like the discussion of what do we think about meme coins in general. But I think, I think one thing that this does show is that like sort of the intellectual, like it's surprisingly hard surprisingly easy to reach people with just a message, like some kind of crypto token message. And we've seen this before. It's just never really been at this scale, right? So like it's sort of similar to like, I don't know, 2018 or something. I would meet some guy at some like, I don't know, party, and he would be like, oh yeah, I've like, he's like a truck driver, has no money, but then he's sitting on 150K in XRP at the peak of the bull market. I'm just like, you're not selling this? He's like, no, I think this is 10-year, like this is the thing. And it's sort of that, but just happening on a much grander scale. Like it's people who are very unaware of what's going on, who are surprisingly easy to pitch with a surprisingly, because like probably the pitch to sort of the Melee side of things, as I understood it, was around like, we're going to use this token to fund all kinds of things in Argentina and blah blah blah, which is like a pure narrative thing, right? Like there's no those types of people, they're not like savvy enough about crypto stuff to actually question like, okay, but what is the what is it? What is the system? Which
Guys,
immediately revealed there is no system.
It doesn't even go that far. They sent his sister money, right? You need to be a greatly articulate character explaining the potential tokenomics of how this ties into your Argentine economy. Just bribe someone. So that's one factor. But second, on the
wait. They went through a proxy, but I doubt Millet would just blatantly tweet out whatever his sister says. Like it was just in this case, the sister was the person who pitched something, right?
I think it's unclear what the sister told them exactly, but it is clear that their financial connections with the sister. Point is, bribing someone is a lot easier to make than making an argument. And just assume that maybe your sister did diligence or whatever. Second, if they have money to bribe my sister, maybe they actually do have money to invest, right? That's the second thing. And then third, on this, people looking unimpressive, and like somebody was commenting that they look kind of like a Playmobil doll or something. There was a certain amount of unlearning that people had to do, I think. Well, for me, it happened post Vitalik, and I had commented this on the pod with them at some point, where the first time that I heard Vitalik talking about Ethereum, when Ethereum was still kind of like a pipe dream kind of thing, I'm like, what the hell? This is like a 12-year-old who's saying he's going to solve the virtual machine issue that like Java hasn't managed to fix. Like that shit ain't happening. And there was a lot of unlearning happening, and I suspect that there's actually a certain weight that people give to like, oh, this looks like someone who got picked on a school, they must be a super genius, right? Oh, they can't actually articulate things correctly. Oh, that's because of how technologically savvy they are. So there's actually quite a bit of signaling that you can get from that, quite a bit of signaling value that you can get from not looking like the usual pitch person that you would send to these things.
Maybe the mistake I'm making is that I don't think of it as Technobabble. I understand why sometimes like Technobabble goes through, like even in crypto for quote unquote like sophisticated VCs, like you can write stuff on a paper, and if the paper is just like written in the academic format and with the same font, you can kind of get away with a lot of stuff.
With the same font.
Yeah, with the same font. You can kind of get away with a lot of stuff in the paper, which is not really defensible. And like, you know, academic papers, they're like overly long, and you're like spending 90% of the time covering your ass and like things like that. It's not that interesting of a read typically either, but like that type of technobabble, I understand why it goes through. This one, maybe like it's easy to mix it up with that, but it doesn't feel like this is quite the same as someone talking about a virtual machine when they're talking about like just a coin, you know.
Well, but so I mean, I think the general thing that happens everywhere in the world is like people just don't really have time or like are a bit lazy to actually do due diligence. And the more busy you are, the less due diligence you do. So I think a huge amount of decision making in the world actually goes based on kind of social consensus or like whatever your social group, right? Like you're like, it's like to paint an analogy, right? Like how many people have looked at the Bitcoin code base, but then there was this like group of people, like a large group of people, now it's massive, but like used to be, you know, smaller but still big, who were like, oh yeah, Bitcoin is secure. And it's like, well, why do you think so? Well, because some other guy said it was, and that other guy probably hasn't read the Bitcoin code base either. Like, and there's this like chain, and we hope that there's like someone at the beginning of that chain who has read the code. But that's not always the case.
A16 said invested, so obviously they must have done diligence on the people. Like, oh no, fuck, they didn't.
Yeah, well, I mean, partly that is like the role of VCs. Like, I don't think anybody. It's not that people are expecting everyone to do perfect due diligence, but that there is an element of VC in general, which is you get some minimum baseline of due diligence from VCs. They make mistakes, right? Like that's obvious. Everyone does. But there is like they do some digging versus none. And you kind of get a somewhat semi guarantee that some digging has been done. But so I think like it's that kind of thing where it's like, you know, if there's just a couple people around you, like it really, the amounts of people don't need to be that large who are like, oh, this could be really cool. That's enough to, in many cases, shift a perspective of someone who doesn't have the time or energy to actually dig.
Yeah.
Where like everyone, you know, in positions of power, I would imagine, rely very heavily on a small group of advisors who have this same dynamic under them, and so you have this kind of pyramid that funnels up, and so it's not crazy that these things happen. But I do think there's this moment in time right now where it's been kind of legitimized to do crypto, and unfortunately, the moment that happens, who are the first people pushing it into the spheres of influence? Probably the worst people you could imagine to be doing that, right? Like it's like it seems to be the case that like crypto legitimized, what do we get? Instantly meme coins. And it's like, oh, okay. Like it this is not how I imagined governments participating. But
for what it's worth,
one more point. Like I do think that we sort of like hold, like whether consciously or subconsciously, hold governments in sort of high regard, and we kind of expect a much greater level of due diligence from them and like thoughtfulness. And what this is sort of exposing maybe is that that's not the case. Like it's the same shit all the way up, right?
Yeah, Teemu, your Nordic European is showing, man. I'm from those countries where we don't hold governments in high regard.
No. I'm very, very skeptical personally of governments, but I think this is like a general view of like you just expect your government to sort of like be a little bit more something than like
that's what I'm saying. I think that's a very European view.
No,
yeah, but what I'm saying is that I think that's a very European view.
I like I'm, you know, Bitcoiner since 2012. I'm incredibly skeptical of governments, but I think this is common as an interpretation that is now getting exposed sort of to the masses in a way that maybe hasn't happened that many times before.
Okay, this is why we're raising the issue. You know, if Angela Merkel or something had tweeted about a particular token, then I could have seen Germans who do seem statistically to have a higher regard for the institutions that Latin Americans people do, to think like, yeah, maybe this is a legit thing. One of the issues that I had with the coverage around the Milei thing, and Libra, I can't recall the exact I don't know what the exact translation for this is. Like, it wasn't investor, it was savers that people were doing, kind of like people who are trying to save. Savers lost this many millions chasing after Milei, and that was the coverage that I saw here in Spanish. And frankly, that is utterly bollocks. People were, I would be sure people were jumping on this because they assumed it was going to be a meme coin that was going to last more than 6 hours, not because they actually thought it was a valid savings mechanism or something. Because again, Latin Americans, particularly in places like Argentina, where they have gotten their governments screw them over consistently, administration after administration, they tend not to trust them. These were people who just greedily chasing after an opportunity, who got rug pulled by.
Of course, but like this is why there is financial, like, regulation in capital markets in general, is because whenever something goes wrong, you get the populist argument of savers were fucked, right? That's how you get it. Like,
Yeah.
and it's very effective as an argument. And so governments have to respond to that by creating something that supposedly protects savers. And you only really need, like, 3 or 4 instances of someone who's like put all of, like, this happened with Madoff, right? Like, there were like people who like put their life savings, and it's just like, okay, like, why did you do that? But my point is, like, that regardless of who was actually affected, the argument is always that these, like, working class people were fucked over.
Now,
And it's because it works.
There was another thing that I wanted to throw in there, by the way, which is why I expect, and again, not justifying the guy, this was an extremely stupid thing to do. But there was one reason why I think, I'm not sure if they picked them because of this, but there's a particular reason why someone like Milei would have been rather susceptible to the token project is actually going to invest in your country argument. And it is that Argentina currently has, I think this started last year or maybe a year before, they have this pop-up city happening yearly, which takes about a month and a half for Aleph. And some of that has been efforts around making Argentina kind of like crypto capital of, I'm sure, of the world, of South America or what have you. So they are clearly trying to attract legitimate crypto projects that may want to settle and develop there. They just happen to attract locusts this time around. So anyway, that is one reason why he would have been also probably extra susceptible, not just the general legitimization of crypto that's going on.
Yeah, and this is a problem. This is like a general problem with being open to crypto, which is very unfortunate. Is like the moment you kind of like open up to crypto, you get the bad stuff first. It's just, I'm not sure that there's anything that can be done about that. Honestly, it's really annoying.
It's probably a market maturation thing. Like, I don't know if this analogy holds, but kind of meme coins are obviously a big part of trading volume today. And like even all the revenue numbers and stuff that are passed on the protocols are kind of derived from that kind of activity. And it's like kind of the era of, internet porn used to be like X percentage of all internet traffic. And the market size hasn't gotten smaller, or the market size hasn't gotten smaller. It's gotten larger, obviously, probably, but the market share has decreased a lot from like, I don't know what the numbers are, but like, let's say from 80% to 15% or something. It's on that like kind of ballpark magnitude. And this feels like the kind of same thing where like, it's just because it is 80, 90%, whatever the number is of the market. And then eventually, like that market, I think will still be big, but it's just that it won't be big relative to other things in the industry. At least, hopefully, if we have success with these things.
Yeah, I think
I'm curious. Given that we're talking about what we think of meme coins and trying to steer this away from just crapping on Milei, at one point, I can't recall in which episode it was, I'm going to have to look it up, but I think it was Teemu who proposed the idea that projects might start going meme first and then build value on top, right? So when you say that,
the Libra, one of the guys who was involved in the Libra thing, who did the CoffeeZilla podcast, that was actually what he said he was trying to do. You can, I mean, obviously take that with a grain of salt, but like it's not an insane idea, right? Like you can look at NFT projects; they've kind of done similar things. I wouldn't say it's ever really worked necessarily, at least not yet. But it's not like a crazy thing. Like if, sorry to interrupt, but like if like a big part of this is actually just like we're going to have a community and then we'll just build stuff that we want, right? Then the token is sort of a logical first step. It's sort of like community first, then technology, products, whatever. So I don't think it's like an absurd concept. It's just very ripe for grifting, which is
Bonkbot probably is the biggest example of this right now. Like it's buying back Bonk at some non-trivial amounts per day, and it's Telegram bot for trading, and it also buys back Bonk.
What is the Bonk market cap right now? I'm curious because I haven't looked into it. I'm curious if it's
1.3 billion FTV.
Yeah, it's not like the price to earnings ratio is like a value stock here, but like still it's conceptually in that direction. And I think Dan was right, and this goes to the discussion we had about, I think last time, about kind of crypto companies issuing a token and then going through this, right? I think there will be this thing of 3 steps, and some things will start from that. Like it starts as a meme coin, so there's no like cash flows. Then there's the kind of this informal period of cash flows, which is like you build these products in like Bonkbot, or like Step Finance does this with their like buyback program, which is they use the fees from the products that they have to buy back Step tokens and distribute those out to like stakers essentially. And that's kind of like more informal-ish. And then as the world kind of moves on chain, you get like full, like kind of same rights as, or codified rights as like shareholder rights essentially on chain. And you kind of go through this process of no value capture, but to kind of informal value capture, or kind of like halfway value capture, where some of it is kind of enforced on chain, some of it isn't. And then you go like full cycle. I think you will go through this period. How many of these current meme coins will actually go through that is like not that many, but you can imagine like the Pengu NFTs and then meme coins and then abstract chain, you finding for each of those something like this eventually. You would expect them to go through somewhat like this kind of process overall for their tokens.
Okay, so just to clarify something, which is why I was mentioning this earlier. By the way, I think Beta Chain has a higher FTV and more TVLs. Like even if half the TVL seems to be staking right now. But why I was mentioning this is because you said earlier, Mika, that probably the percentage of meme coins the percentage of value of the meme coins in the market was going to be comparatively, or it was going to diminish. So I imagine then that you mean the percentage of meme coins that remain meme coins, not the percentage of projects that were at some point in their life a meme or a meme coin.
Not necessarily. That's like I just think if by meme coin you mean like trading trash essentially, or not even that. Maybe that's like too derogatory, but let's take even that. Like that kind of stuff will remain in the industry, and like it's not that those things like when I talk about the 90%, if you will went from meme coin to like actual, like I can do a DCF on this thing, like that's not in that 10% bucket anymore. That's in the bucket of 90% like things that are good, like utility and like kind of normal businesses.
Okay.
Yeah, I think, but the problem, like, right, in theory, that all sort of makes sense. The problem becomes that if it's sort of like normalized, that you can just launch a token, you don't need to really have a plan. Like the whole point is just like, let's get an initial community and then we do something. that's just such fertile ground for scammers. Like it's just such fertile ground. Like you're saying that the legit way of doing it looks the exact same as the scammy way of doing it in the beginning, until
again,
there's a rug.
Devil's advocate there. How is that different from an Ocean protocol coming out with a paper that they pretty much have zero chance of actually getting out there? Like they're actually going through the motions, therefore is more legitimate?
Oh no, I'm not making an argument that like there aren't plenty of projects who are positioned as sort of supposedly technological. I'm only saying that if it's normalized to have token out first and have nothing else, then that's like like if that's what people are accepting on the market, then it's optimal for scammers because that's the easiest thing for them to pull off. Like even having a white paper is something. Like, and the more somethings you have, the more barrier to entry you have, right? But if the market is accepting of just having nothing, then it's too simple, right? Like you can put out a new experiment to see what the market will accept every day. You can do 50 a
but
day.
the market will react to that. Like then you will just
Eventually.
oversupply the market, and then the reaction to that is that okay, like you need some more substance behind it. Then it's like, okay, is a white paper enough? Is like something like the Pingu like toy line and abstract chain enough? And then you start to hit
the devil's advocate here. What I actually care about are non-falsifiable signals. And maybe the white paper thing was harder to falsify in 2016, 2017. Now it is really easier to falsify, particularly when we were talking before the call about how even investors, like supposedly educated investors, don't even read this stuff or just want to read something confusing that makes them feel smart, right? So that white paper is still, like, for me, basically the only non-falsifiable thing is actual usage numbers and actual stuff out there working in some way, shape, or form.
Wow. So we can debate whether those are falsifiable or not as well.
Okay, it's harder to falsify at least, and you can do some research on it. But what I'm saying is that for the average user,
levels.
What I'm saying is that for the average person putting money into a project, having a token or having a white paper that they're not going to understand is exactly the same thing. The white paper could have been GPT generated. They're not going to know, right? So I think that, and again, like, I realize that I'm borderline defending the people who just launch a token, but what I'm saying is that this is exactly the same. And I don't know, at the very least, the other ones, you could argue that they're going for the vibes or the community or who cares.
And I mean, there may be like a negative bubble around this, but ultimately, like the market prices these things, right? And then sometimes you'll overprice that, sometimes you'll underprice that, and you'll take all the signals, whether it be nothing, or it be like a white paper, or it be usage numbers, or it be something else like just team quality. The market just prices those in to the asset. They're startups, they're risky, the volatility is high. So it's like, in some sense, there's nothing wrong with going through that process. Although Teemu is, of course, right that process tends to get ugly in many, many cases. But then it gets ugly in those cases, and then we just kind of work through that, and it is what it is. I don't think there's another option.
And you are right that the market reacts, and I mean, I think that's what we're seeing now, right? Like the market is basically, and this relates to both of your points. So the market is saying, like, we essentially are largely unable to distinguish between complete scams and like legit projects, and so we're going to sell everything, right? Like just everything, with like a couple of exceptions. There's like, you could argue Barachain, you could argue Hyperliquid. There's Mantra, which I think is a harder one to argue because we don't really know how that's going to go long term, and I suspect it's pretty heavily manipulated.
Yeah, I mean, like even the Aave token is up quite a bit in this cycle. You know?
Yeah, but yeah, exactly. So like, there's some, like, I wouldn't call this a flight to quality, but there's certainly like a market reaction, like, which is just like, there are too many of these projects, we don't know which ones are legit, like we're just not going to participate, kind of thing.
So what would you call it if not a flight to quality?
like I'm not sure. Like flight to quality would imply that you would have like some things popping and then other things going down probably, but I don't think that's what's happening. It's more that people are just pulling money from the market and being like, I don't know what to do with it.
I mean, not necessarily. You
Flight to
could
quality
have
into euros and USD.
I mean, I do think you could have a scenario where you have a flight to quality while at the same time some stuff. Well, at the same time, the market generally seems to be going down. It is just because people are taking profit and selling as well, just because of general uncertainty. So that could still be a flight to quality.
And it's
No,
flight to quality is
I'm
more likely. Like in the beginning of these things turning around, there's more of a flight to quality. It doesn't mean every single thing that goes up is like high quality, but it just means there's like more of a correlation between that than before. And then, if it gets bubbly, that just means by definition that signal gets less trustworthy, which means that things get overvalued, and then you kind of run this cycle kind of again here. Like it's not, there's like the market over the completeness of time, if blockchains become like used in the world, this is such an easy problem for the market to sort out, because it's like, well, the people who make the most money are ones who compounded the cash flow of their positions into like let's say like some token that's trading at 10 mil right now is doing like 5 mil of business revenue that gets back to you by buybacks or something. Like you compound your position via that way. The business happens to grow because it's a good business. Eventually you'll make, that's how you make like in crypto, it's gotten so lost how you should in a sense make money, because the market has been so early and so volatile so far. But like if you play this out over the next 10 years on a success case, like that's what success looks like to most investors. Like obviously there will be situations where someone like gets in quote unquote lucky or on the right trend or something, but most of the money will be made just by the boring methods,
So we're going to move towards more what the traditional world looks like to some sense, where there's like speculation, which you can like put into like kind of the VC bucket, or like we think this is going to be a big deal at some point, and that's more like floaty speculative money. But that eventually like you need to actually like start demonstrating economics that work, and that's the only way to kind of keep going.
So related question to also connected with our last call. Given that we can't agree if this is a flight to quality, but we do agree that flight to quality is not a bulk market behavior. We can't agree if it's a flight to quality or just people pulling money out of the market.
Flight out of new projects.
Out of new projects.
Recent launches have all gotten hammered.
Sure, but that's not a new thing. They've gotten hammered in the last year or so. So
the last 6 months being especially bad, but yeah.
But I mean, Ethereum keeps sinking. So has so like Ethereum keeps sinking. So has lost about 30% of its value in like 4 weeks or something of this world. Do we still think this is a bull market?
We can go into that, but like Ethereum sinking, like the 90-day Ethereum price is 17% down. Like I'm sure this is a big deal to some people, but like
that's what I was gonna say. Like
I don't give a shit until we're talking 50%, like 30-day down. Like it doesn't matter.
Yeah, bull market vol for BTC has tended to be like drawdowns are in the mid 30s, the largest ones. Like in the last couple of runs, like there's 6-7 events where that's happened. BTC has been very, very resistant to that. Like the only time you can really make the argument that happened was like if you take the 60 or the 60K range and you take the very bottom tick of one of those drops and take the very top tick at like an early, maybe you get to like 28 or something like that on the number. But like that by definition has meant that the second, third biggest assets to drawdowns are like 50% or so. And the things that got up the most, like last cycle Axie Infinity, had like 80% drawdowns in that process. So the current vol isn't like out of that stage. Like it would be super weird if like Sol didn't have 30% drawdowns in a bull market. Like it has to have them, kind of definitionally. Whether or not we are still in a bull market, that's a different question. But that information says nothing about like that the drawdown is like too big or something like that.
So,
yeah, generally agreement.
but going into whether we're still in a bull market or not, it's actually tough to say. Like, and we've talked about this before, so I don't want to rehash too much. But I think like it's very hard to see what will push the market significantly higher, besides macro. So I do actually think that macro is the thing that will play a big role. If you look at like historical changes in M2 money supply, crypto trades very close correlation, right? And that is like a point at which we're in macro is like in the next few months, either more money goes into the economy or most likely something starts to break. Could be wrong, but that seems to be kind of where we are. So we'll see what happens with macro, but I don't see like an internal thing from crypto that would drive the market way higher. And so I don't know. I don't think this is entirely a circumstance which is reflected in historical cycles, because usually it's always been like we had something was super over leveraged, a drawdown like we've had here like a couple now, that would have been enough to just like unwind all the leverage and crash, right? And from that perspective, from a leverage perspective, the market has been across the board incredibly resilient. And so that's quite different in some sense. So there's not like a clear thing that will crash it, but there's also not a clear thing that will push it a huge amount up. So I don't know. Is that a bull market?
Yeah, the fact that like BTC, you can leverage it with below neutral funding rates at over 100K is a super weird thing. And like that means that there's at least no flush available to you. Like the kind of, we just recently had like a huge deleveraging or huge like liquidation period, and the price didn't go, it like bottomed at like 92K, and that was like a wick, you know? So
Yeah.
that's pretty crazy and like very rare. So the market structure, like, yeah, like Devil said, it's sort of primed for, if it gets hot, it can get a lot hotter, but it's just that it just doesn't come to you like what exactly is the thing that makes it so hot.
And maybe we just are not the ones that are seeing that, but but then to put that back, so there's certainly been a sense that we're in a bull market, but if we're kind of like this, I don't think this is, I think the crypto cycle stuff will hold. Like there's something semi-mystical about it, like it just will continue to happen. But if we expect this that we're actually at kind of like a pretty stable position, then hot would mean up considerably, which is kind of like a crazy thing to think about. And it's possible that we just cannot foresee. I mean, it's likely that we can't foresee what would actually drive that. But like it's wacky to think that like maybe this is DeFi summer and bull market is around the corner. I wouldn't invest based on that, but like there are many elements of this current market that kind of seem that way. But personally, I'm very much of the opinion that like the dynamics of the bull market may change, but the cycle will continue. So I would be relatively risk off.
This to me is like one of those like horseshoe kind of moments where because there is a market structure argument to be made for higher that makes sense a lot, you actually might want to be on the risk curve with part of your portfolio a lot, because you're kind of like, okay, it hasn't happened yet in any way, and BTC has outperformed everything as well. So it's like, and it's gotten to numbers which historically for it are quite high as well in terms of relative dominance. So you may be thinking like, okay, with a part of my portfolio, I want to go fully risk kind of on and further along the risk curve. And then with the rest of your portfolio, you just go more conservative to kind of balance that. But you don't want to be kind of caught in the middle. And the
like
middle has worked very well right now.
Yeah,
if you consider the middle BTC. If you consider it ETH, it hasn't worked for you, but like if you consider it BTC, it has worked well for you so far.
Yeah. I mean, but I don't know. Maybe this is like sort of my pessimism. Like, so basically, what I'm hearing is you say more risk, I say less risk. But I think we're talking kind of about the same thing. So, like, you want exposure in case something crazy happens. But I do want to be clear that something crazy happening from here would mean like restructuring of the whole world economy. Like, you know, like if the market 2x's, it's a $6 trillion market. Like there's, it means every political system will be hijacked by crypto people, essentially, just like the US already has. But like that stuff, like we're talking, that's a pretty crazy outcome. I think it's not impossible, but it seems a bit wild.
Okay,
What do you think?
so that's going to be interesting. So basically, a likely consequence of that would be what, like a lot more governments pulling a stupid melee stunt and tweeting something they should, and we start seeing blow-ups like this on the way up because people crypto.
I mean, that'll continue to happen to some degree. I think like there's just like it's the same as any other government grift, like this, you know, whatever, it'll happen. But I'm saying more like the actual, like getting elected in, like if you imagine how many people across the world would have gotten rich because of crypto if we went to X plus from here. It is a substantial amount of wealth across the world created by this one thing alone. And those people will vote based on that, as we've seen already happening in some countries. Like I'm actually surprised at how effective the crypto lobby has been in the US, because it's a relatively recent phenomenon. But now, like, crypto is already biggest donator, as far as I know, out of everyone, right? And that changes the whole game. If in order to get to power, you need to promise good things for crypto, then what do you promise them? You promise them strategic reserve, whatever, blah blah blah. Like basically, like everyone forces their governments to become Michael Saylor is what happens.
Yeah, or at the very least, you make sure that they promise not to interfere with the way that you get rich, right? Like, oh, I like this thing. I want to hold my assets in this thing because I don't trust your bank that blows up every 60 days. So, and that already sets the tone. Even if I don't know, if people get rich from crypto in other countries, they're not going to get rich in an A16Z Coinbase level. So I don't think they're going to be contributing to. I don't think they're going to be contributing to political campaigns the way that it has happened in the US. But I do think it is
not by a donation necessarily.
Sure. What I'm saying is that I do think it's going to make it a lot more of a career risk to be against crypto, even if crypto people are not necessarily going to fund your campaign. So on that, I agree.
Yeah, it's like, do you want to? Because like in many countries, I would assume that the amount of people that hold some crypto now, we're talking semi-high double-digit percentages. This is significant. Like, and if you're the politician who's saying like we're going to eradicate crypto from the country, like that's a big voting block. You're touching people's wallets directly. Those people don't want you to eradicate their wealth.
This is a bit of a different point, but I wonder if you get kind of same dynamics, or what the world would look like if, let's say, from the moment that Facebook launched they just had their public stock and like public offering from that second, and like throughout the entire life cycle, first whatever any years it was before IPO, like all the kind of kids were buying it, and like some of the adults were buying it, and the wealth effects from that. Instead of like having Peter Thiel just on one end of it, it would be that kind of wealth effect for people. Like that kind of world is one where we essentially would be heading if this stuff is still in the same way that Facebook was.
I'll say one more thing on this, because I think that what you just said is a very good point. And so one way to think about this is out of cohorts. Who doesn't hold any crypto? The old people. Who holds crypto? The young people. Who's in power? The old people, who are becoming every year a bigger portion of the voting bloc, the young people. And these are, I'm using very binary terms. It's not quite as simple, but sort of broadly speaking. And so you have this situation where the old people are very against crypto because their wealth is tied up in traditional assets. The young people, on the other hand, are much more tied up in like blockchain crypto assets. And so they want to defend that. And this battle will continue to go, but it's starting to already get to a point where like you can no longer afford as a politician to just side with the old people. Yes, the populations look very skewed kind of towards the old people, but these guys are also dying off in droves. Like it's not a long-term viable strategy. Old people's homes, just like that's not every year. That's a worse outcome as a voting base, and so I think that continues. Like that just happens, and it's just a matter of time. And the other thing that sort of spurs this on is because of the immense wealth already created, these young people have outsized influence in society relative to many others. The same could be said for tech and these types of categories where you've often had outsized outcomes. But I don't think anything has created outsized outcomes for so many people before. Like usually it's sort of like the founder and some early employees, pretty small group. But like Bitcoin is it's millions, probably tens of millions of people. And so you have a different outlook. But can I quickly, going back to bull market or not bull market thing, just to get your thoughts? I want to give the counter perspective so we don't just talk about maybe we go way up, because that might not happen. I think the other, and I'm curious to hear your thoughts, I think the other option, and this is sort of like I'm trying to sort of balance, like figure out where I sit in probabilities between this, like if things could get very, very crazy, and then maybe they don't. So the other option is basically that there's just nothing that pushes prices up significantly, but there's also nothing that pushes them down that significantly. And so you just kind of have this like sort of like exhaustion happen. And maybe like the crash isn't that severe. Maybe it's just kind of a tapering off slowly, simply because like once people start to lose confidence that there is upside, they start to look at other asset classes. They start to rotate out into things they think have more near-term potential. And then this leads to kind of like a slow decline. And I think that's like also a possibility. And if the money supply doesn't increase, I think that's actually like a reasonably likely outcome. But then we're into the field of speculating what central banks and stuff will do, which is annoying, I think. But that's what I see as kind of like the down scenario. What do you guys think?
The best counter argument that I feel like I can give in that specific scenario, which is not a lot of drawdown, but kind of a slow loss of enthusiasm, which may be like kind of a little bit of a bleed out, is that at these levels and at these like capitalization levels within the industry, the ability of the industry to create stuff that creates positive momentum, whether sustainable or not, is pretty good. Like just our ability to come up with the next storyline in that kind of market, like feels like give us 12 months. And
do you think the turnaround time is fast enough? That's kind of the question, to a degree.
Like if you don't have a big drawdown, the industry is so well capitalized at current prices that if you allow us, like that's my argument, if you allow us to be at this wealth level for a while, like one will find ways to push this further. Like you, if you promised me, okay, BTC won't go below 80K for 10 months or something like that, or 70, so let's say 70, and that's the kind of level that we're in. Like it feels like we're able to come up with momentum within that well enough, but that's a very hard argument in some sense to make, because I'm still not making a concrete argument about anything. I'm just talking about like broader market structural things, which kind of historically are true, and there's good reasons to think why they're true, but it's still like a stupid analysis where I'm not able to pinpoint kind of something more specific.
Yeah, I think that's not a bad point. So like the way to make it concrete as a thought experiment is like if we hold these types of levels, this is just a massive industry to sell into, and so there will be huge amounts of people trying to do all kinds of things that to sell into this industry, and it, like the likelihood increases greatly that one of those things is like the next big narrative kind of thing. Ricardo, what do you think?
Well, okay, before I actually let me process these things, because remember that I did think that if we managed to get crypto well integrated into the world as a whole, then this would likely taper down both the upside and the downside, cap both the upside and the downside. So from that point of view, as long as this continues getting adopted beyond just random present launches on meme coin, then I do think the industry is good for a while. Not necessarily bull, but not necessarily the depths of bear that we have seen in a few cycles. I do like that you brought up the turnaround question, because I do think that the thing that if one were to make bets at this point, the thing that I would be prioritizing is adaptability and performance, ability to perform, basically. I would be very bearish the chance that behave like gerontocracies, or where basically the only thing that they iterate on seems to be whatever thing they present us. And I would be a lot more bullish on the assets that are backed by teams that have continued working. I haven't done my I love Solana bot rant on the call. We've had some discussion in parallel, but one thing to say about that community is that they have continued building throughout massive explosions and whatnot, whereas others seem to be at each other's throats the moment that there's half a hiccup. So it is perfectly possible that we do see a significant dip or even a continual bleed that just doesn't stop on the projects that just don't move fast enough. I guess I'm kind of like in that train of thought, because this is connected to what you said earlier about people who own crypto are likely on the double-digit %. And I wouldn't say that's the case in most places. And again, I think that this is inversely correlated with how much you trust your government. Just earlier today...
Name some country, and let's just Google it out of curiosity. I don't know, but
just earlier today, actually, I saw a recent Verivox survey that somebody from Die Welt posted about, where 50% of Germans actually rule out Bitcoin investments. Only 9% have touched it at some point. So even the ones that have touched Bitcoin, which let's say is the most it's the brand name asset of crypto, that is below double digits. Now, this is again because I think of how strong a correlation there is between an inverse correlation there is between trusting your government and going to these things.
Sorry, some news source says 11% of Germans.
Okay, the number that I saw today from Verivox was 9. My point is that I think that we're going to see something similar play out on economies as well. where you're gonna get the ones that were weaker before being faster movers and being able to adopt these things much easier than the ones that are actual gerontocracies right now, like Germany. Anyway,
Yeah.
that's
A
a
lot of
roundabout
these,
way to.
a lot of these countries, though, the people who say they don't own, like the Norway Sovereign Wealth Fund owns IBIT and MicroStrategy in it. So the Norwegians hold, like they will, and like when you buy broad-based index ETFs or something, this stuff is close to finding its way to your portfolio as well.
Okay,
So
fair.
you are actually
MicroStrategy might get into the S&P 500, right? Like,
yeah, exactly.
that would be funny. that would be honestly like, oh my god! It's just, if you wrote a movie script for that, people would be like, "This is too stupid." Like, it's no one. Why would anyone do that? But one thing to note. So I don't disagree with Ricardo. I think like it does depend on the country, but at the same time, even in countries which sort of on the metrics that we would look at, like how much they need Bitcoin and blah blah blah, we're still talking like, let's say, at least low double-digit percentages, or like in the 10% range, right? And as a voting bloc that is very incentivized to vote their book compared to like most other topics, right? Like, do you like diversity? Like, will get some people out to vote, but if someone is like, look, we're going to like literally like go into your pocket and take your money, like that gets people out to vote. And so as a voting bloc, 10% is already significant. Like, it's a matter of how motivated, like we've seen this in on-chain governance all the time, right? Like 90% don't vote. Like, that's just how it goes. And so these like small, very motivated minorities are very capable of swinging votes. And if you assume that that number continues to increase, and in many countries it's probably a lot higher. I think in the US it was some pretty bonkers number, like we're in the 40% range or something like that.
Pew Research had at 17. US.
17
Yeah.
in the US.
Yeah.
Okay. Well, anyway, like we're like, and that number continues to climb. Like, if we get to a point where 30% of your population is going to be incredibly motivated to vote against you if you say anything bad about crypto, like, impossible to get elected. Impossible. And so like that will shift things quite a lot. And yeah, we'll see.
I mean, a 10% of actual voters, a 10% of militant voters can make a lot of damage. I mean,
Yes.
just in the US, I recall that the turnouts in the last elections have been between 50 and 60% of the people who were able to vote. Right, that's 15%. Let's say that right there is 25% of the people who actually show up. That can have quite an impact.
Yes. And then you put on top of that the lobby and like, you know, all of that. Like, I would assume that the kind of what was done in the US now gets replicated in every country. Like, it's suddenly become clear to everyone, like as a percentage of kind of like the wealth that's been created, the amount we need to lobby is not that high, and the impact is significant. So like I think that just continues to happen. But we'll see. Like, it'll be an interesting time. Like, it's also possible that it kind of like peters out a little bit from here and so on, and like all this stuff kind of takes a backseat again. On the Solana thing, so I actually had like multiple people calling me in a panic, and I was like, wait, you're panicking because we're down whatever 35%, like, is and then
Are you new, like first time?
Yeah, and they were like, wouldn't it be better to like get out now just to make sure that, you know, whatever, you know, we get some money out? And it's like, I don't want to give guidance on this kind of stuff. But the one thing that I did say, which I think is like kind of like it's like if this is the point at which you sell, so obviously if you're very inexperienced, like then I would almost say like maybe just don't touch it, or touch it with very small amounts, play around, whatever. But for more experienced people, it's like getting out now is sort of the is exactly what leads to bad outcomes in terms of your investment return, is like getting out in the panic. And this is sort of contradictory to a lot of stuff. It's like there's this traditional financial thing of like, you know, if you're going to panic first. And like, sure, yes, but also like I generally try to never trade in like a significant up or down movement and wait for things to settle, because that emotional thing, like it's that feeling of like, but maybe we would have something left, like it could be that Solana is going to zero, like that's why the price is going down, is because other people are feeling that too. And it's very normal and it's very logical in some sense, but it's also like, if that's how you're going to participate in investing in cryptos, then you probably shouldn't be investing in cryptos, right? Like if like that emotional reaction means that you're likely to buy when prices are going up, which is the wrong time to buy, and it means you're likely to sell when the prices are going down, which is the wrong time to sell. And so as an investment strategy over time, you just like cannot afford, if you want to be successful at it, to be emotional in those situations. And so that, and I think fundamentals have not changed. Like Solana still best horse, as far like in my view. Like there's probably a lot of people that had very high hopes that were, you know, whatever, got disillusioned, or the meme coin, like all manner of explanations. But given that the rest of the market isn't really reacting in the same way, like it is sort of like Solana centric, there's a couple others, but like it's not like a market wide like dump, right? That tells to me that there's something quite Solana specific about this. And as far as I can tell, whatever Solana specific thing it is not relating to the fact that it's still the place where everyone is launching everything right now.
Yeah, I mean that we've had this conversation before, and I do my utmost not to give people advice, or then if they tell me that they're holding like a lot of money in a meme coin, like seriously reconsider if you actually want to be doing that and what your reasons are. But other than that, I just tell people do regret minimization. Basically, like, oh, maybe I don't know, like maybe these people came in with Sol at 20 and they're freaking out because they're 8x up and they don't want to just be 5x up. Like, do regret minimization, right? Maybe you came in around this price and you want to get out of the market altogether. Regret minimization. That's what solves all these cases for me, because you never know what people's calculations are. You never know what's going to make them feel like shit. You never know how much of their wealth they're risking on this stuff. So it's always a terrible thing to have.
Can I counter that? So I fully agree. Do regret minimization. But if you're going to invest in this market, regret minimization is also basically the same thing as trading on that emotional like reaction.
No, I would disagree. If you actually do it with,
like you can argue that like from like whatever I bought Sol at 240, it's now 180. I need to do regret minimization because I want some of that money and sell.
Okay.
And that's fine. And people can do that. Like you do regret minimization. I agree with that concept. But my point is like if the application of that regret minimization in this investment market is going to be to objectively trade badly, then don't participate in the market.
And this is
okay. So that part I agree with, but for what it's worth, I do tell these people usually in advance, right? You need to write these things down, which is another thing that I do tell people: write these decisions down, because when when you're freaking the fuck out, you're not going to be seeing things with the same eyes, right? And once you write them down, you say like, oh, 3 months ago when I was not freaking out, this was the decision that I make. Why am I freaking out now?
And Teemu is right about the fact that if this is a situation in which you're forced to reconsider your portfolio, you're not someone who can gain an advantage in this market systematically. Like within the range of outcomes,
That's what I mean.
This should have obviously been on the table for you. Like there's obvious case to be made that, okay, maybe we have a cooling off period because the meme coin thing, we have a bit of problem with the numbers are inflated everywhere because the trading volumes are so large, and there's going to be a moment that's going to be out of that.
Sorry to interrupt.
Yes.
But like you need to, in your investment strategy, have the possibility that markets crash by 95%, and you do not have time to react. And if you have that, then fine. But like the reaction means that that's not included in the analysis.
The best way to put this, which is another thing that I keep telling people before they actually get into any market, is that there's this line from poker players that the money at the table is no longer yours, basically. And I think that is truer than anywhere in crypto, where you may make the wrong call and things go to zero, or you keep your assets in the wrong place and then that place collapses. And even though you would have had value, what you actually hold now goes to zero. So it's definitely, but usually when this happens, it tends to be also when people have put in a lot more than they could afford to lose, which is a completely different thing.
Yeah,
but while I do agree that I do agree with you that the majority of people should not be involved in this market at all, the fact is that's not necessarily something that you get, that usually manage to get through people's heads.
But there's other like part, like what can happen is you put in an amount that you can afford to lose, but now the amount is large and you've already sort of internalized that you're rich, and so now you feel you can't lose it, and like then you should have been selling along the way, like there's all these other things. But Mika, I interrupted you. I want you to continue on your point. I just wanted to really nail home that like 95% drop is possible, and you need to be ready for that.
I think I made that point already, so I'll make a different one, which is that your net worth is what it is after a proper drawdown and 6 months of sideways after that. That's your net worth. Your net worth is not what it is when you open CoinGecko and it's the best day you've ever had in your life. That's not your net worth. And that's the right way to think about it. And I think regret minimization is like good. And I think like people, like crypto, you should have owned systematically over the last 10 years. And I think the same thing applies over the next 10 years, which is that like if someone is going to put money into this, like you can think, okay, if I put 7% of my net worth into this, that's the average stock market return for the last 100 years. So it's 1 year of like returns basically. Maybe that's the right amount for you to put into whatever BTC or BTC and Sol or BTC Sol, ETH Sol, some portfolio, and just forget about it for 10 years and don't do that. Like you're not an active market participant, hopefully, like some people are, but you're not an active market participant in like Tesla's up and down either. When you buy like S&P 500, don't be in this either. That's the right thing for 99% of people. And it's a strategy that would have worked out very well as well. And I think we'll continue to do so. But even if it doesn't, then then it's like, okay, it was 1 year of stock market return in my portfolio, which puts my like, when I'm personally building up wealth, my compound, that's a certain like, it implies certain things about that, and that there is like that right amount to do. But it's about portfolio management, not trading for almost everyone.
Yeah, and I mean this applies, I think, to investing in general. Like, and like it's kind of a tricky topic because I think, like broadly speaking, investing or kind of like putting your money to work, as people say, or something like that is a good idea for most people. Like that is a very good strategy. But you run into problems very quickly when you're hoping for life-changing returns very quickly, and that's never a good starting point. because then you're probably oversizing, you're like stretching to do it, and then your stress levels go through the roof. When anything happens, you start reacting emotionally to all kinds of things. Like investing is just not an emotional game in a sense. And I think crypto especially attracts, like, because of its history, because nowadays you'll meet people in life who have gotten wealthy on crypto. Like, you just have this like thing of like, okay, maybe I could do it too. And it's the same thing as like you know, people on YouTube or Instagram saying they can teach you how to get rich. Like, that's not like people can get rich, but it requires more time and patience than, you know, many people would like you to believe. And those people who want you to believe it's possible usually have an agenda. They're talking their book. So yeah, it's difficult, and but I agree with Ricardo that like giving advice on this stuff is in general super hard. Mika, when people ask you what they should be doing, which I'm sure happens as well, what do you usually say?
I say number one is to discourage them from the idea. Then number two is if you buy like the top 3 assets market cap weighted, forget about it for 10 years, never ever look at it again, think the money is gone, and come back and set the alarm at 20. Like today, if someone asked me, and I might get the question today, like it happens often enough, I'll say put the alarm at 10, like 2035, and like I don't know, like if your 3 top assets aren't performing anything like the industry is, maybe then ask a question within the 5-year mark about whether or not this is the right allocation still, and then just like go with that. And if you look at like position sizing, like I think the kind of back in the days, one would have said like, okay, maybe put 1 or 2% in. I do think nowadays it's probably justified to be in like a young person's portfolio, 5% or something like that. So that represents an annual, like the annual yield basically, or annual like return on the stock market in some, you know.
So not like 80%, which is probably all us 3.
Yeah. I would never recommend like those strategies, but I think like the 1% strategy would have been good, and I think the 5% strategy is the right one, like right now.
Yeah, the issue I have with this is I get asked a lot, but I only get asked in a bull market. And so I always, like, as an instinct, I always tell them what I'm doing, and don't really tell them anything else, because usually the question is asked at a point in time where I'm selling. And so I just tell them, well, I'm selling. You can do what you're going to do. I don't really want to say, because like it's possible that at the point I'm selling, there's still plenty of upside, right? Like I don't want to be the guy that told, like the crypto guy that told them not to buy crypto and then it went up 3x, but I also don't want them, I'd be the guy who told them to buy it and it didn't, right? So I sort of tell them what I'm doing and hope that they extrapolate from that I might have more information on the market than they do, and kind of at least weight or like size relative to that or something like that. But it's very difficult.
You know, I've gotten very good at not talking about what I do. Like
somebody
from my
IT.
was like, hey, we meet like twice a month, and you know, you never talk about what you do. Oh yeah, I'm in fintech. Software.
Oh, you
Software
say
engineer,
fintech?
man.
I said software. Yeah, software is great. And they're like, oh, what kind of software? Oh, I don't know. Like
fintech. I've worked a lot with banks. You know?
Stuff. I don't know.
That saves a lot of questions, but particularly when it's in the news, right?
Which is actually a good piece of advice. Flip the other way. If someone is making it a big point that they're in crypto, you probably shouldn't listen to them.
Yes,
probably shouldn't.
Actually, yes. That's
the emotional thing as well, which is like the people who've been here for a while, who know what they're doing, they're calm, you know, like they're not panicking on Sol from 270 to 170, you know, like that. just calm, man. Like
I
just,
think OG crypto people, you know, Band of Brothers. There's like this moment when like the new guys come. OG crypto people are the old guys who are just like, yeah, whatever, just smoking a cigarette. We'll go fight some guys, whatever. And they don't make a big deal about it. But yeah, I'm just always super suspicious about anyone who is like actively marketing themselves as like a crypto person.
Yeah.
Obviously, like all of us market ourselves as crypto people within crypto, like to the industry. But if you meet someone at a party and they're like, oh yeah, I'm in Web3 or blockchain or whatever, like I'm incredibly suspect about everything else that person says. And you know, it happens from time to time, and it's kind of funny though, because I start grilling them on things, and then you know, it turns out that they don't really know what they're doing most of the time.
also, like this subject has been like we've gone through the market, talked about a lot of stuff in our work. We talk about this stuff, like we talk about it for so long that it's like if someone is at a party, it's the last thing I'd ever want to talk about.
Exactly. Yeah, it's
I mean,
like
people,
whenever
this is
somebody's
a wine tasting.
yeah, it's like whenever someone is like, oh, what kind of like if they dig enough to get to like, okay, crypto, like it's always like, I'm gonna need to talk to them about something. Like they're gonna ask me about something or other.
What you need to do is talk like if you were writing the Eigen white paper. They start talking about peer-to-peer protocols and voting mechanisms and the fork of choice.
Intersubjective tokens.
Yes.
But the other advice here, potentially, which is kind of counterintuitive, is like the person who most doesn't want to talk to you about crypto is probably the person you want to ask about crypto. which like if that person for you is me, don't. But you know, if it's someone else, fine. Anyway, let's call it there. Thank you everyone for listening. I hope this was maximally uninformative as always, and see you next time.
Ta-ta.